Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, and let's go over really just what we can expect moving forward. By the way, happy leap year. Today is of course a leap year. Tomorrow is a fresh month. Well, to the stock market. So anyway, with all that being said and done, let's just jump right into it. If you enjoy, please don't forget to hit that like button. It does help a lot. I do appreciate it. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below if you're interested, where I constantly post, updates, all my thoughts, pretty much kind of what I say in these videos, but throughout the day, live, as it happens, as I see it, as I'm understanding it, or, whatever, things like that, right? Technical analysis updates, options flow updates, which is a paid service. So you get that essentially as a bonus. And yeah, link is just down below for just $3 a month. If you're interested, definitely check it out. But yeah. Let's just jump right into it. Tesla closing the day. That's Google's chart. By the way, Google not looking, has Google potentials there. There's some potential here for at least a short-term bounce. But anyway, Tesla closing the day. Well, this is actually after market hours as well. Tesla here is actually closing the day down, unfortunately, still 0.12% at $201 per share and 80 cents, of course, which unfortunately compared to the market is, a bit of an underperformance, right? The market decently green, QQQ up almost a full percentage point, right? Which is pretty damn good. So Tesla just feels like it's really that rebel child. It just really wants to do whatever the market's not doing. So if the market's red, hey, Tesla's like, I'm gonna go green. If the market's red, or if the market's green, Tesla's like, I think I'm gonna stay red. So let's talk about it, right? What does this all mean, right? What is happening with Tesla, right? Let's discuss it. So today was an interesting day in a sense that it was a boring yet interesting day in the sense that. So we had the PCE numbers come in pretty much exactly at expectations as far as I'm aware. We had the morning pop in the market and Tesla, well, completely and utterly just, sold it off. Interesting enough though, where did it sell off at, right? What level did it get resisted at? Well, ladies and gentlemen, the exact same level it has got resisted at 2 times just recently within the past, 2 or 3 days over here. So this is why I talk about these levels. But more interestingly enough, where did it bounce? Where did it find support? Pretty much exactly at that 198-ish level, right at that top of the green rectangle box that it has several times in the past that I pretty much buy almost. I missed one of them. I said how I missed one of them. I slept through by accident. But I did buy this one a little bit higher than because I was eating lunch. But I did buy that dip as well. And I do have some shares now, about a quarter of the position that I sold. Because, Tesla just loves to bounce here and loves to get resisted here. What does that mean though, right? If you think about it, right? Just, thinking overall, what does that actually mean? Well, it means the fact that obviously we're chopping between these 2 price ranges until a direction is picked. How is the direction picked? Well, obviously until we breach one of the 2 levels that we're constantly getting rejected at. So for instance, about 205 to 206. If we can breach that and set a higher high and essentially break the trend exactly the way we did over here, as we were also zigzagging pretty much the exact same way. Check out, look at these 2 scenarios right here. Tell me they're not almost the exact same scenario. They look almost identical. Right? And what happened finally? We had massive push upwards. We broke this congestion period. We broke the highs that we kept getting rejected at. And we essentially went to the next level. And now we're doing the exact same thing. Now, granted, right, it's not guaranteed to break up like this because obviously the absolute opposite can happen. You can break downwards. And then same situation applies, except now to the lower level, right? Just keep that in mind. Right? That's exactly what we're doing here, right? We're just chopping, like we talked about. We're chopping, doing a whole lot of nothing, just zigzagging between these 2 levels until a level gets broken. This is why I always talk about the area that we're in right now, in my opinion, is just a patience game. It's an option seller's market and or a scalper's market. For instance, you buy 198, you sell 204, 205. Rinse and repeat. I've done that 3 times already, 2 or 3 times already, and I'm doing it again right now. I have shares. Now, again, like I said, it's only a quarter of my position I sold, but nonetheless, I do have shares again. So anyway, that's kind of the situation we find ourselves in until one of these levels is broken. Now, the question, of course, is, okay, fine, cool. Well, which level will get broken? If you had to take a guess, right? Which level will get broken? Now, this is where, this is just purely a guess. Usually this is this is just looking this is like tarot cards, essentially, right? It's superstition almost in a way, right? But if I had to take a wild guess, I'm actually slightly more bullish, not a lot more bullish. If I had to put percentages on it, 55% bullish, 45% bearish. Not overwhelmingly bullish. I'm just ever so slightly if I absolutely had to pick direction, I'd pick bullish. Why? Well, we're holding the 21 EMA. That's literally the only reason. I like the fact that we're holding the 21 EMA and we haven't broke back below it. The 30-day moving average, this orange line. We're holding essentially both of them. More importantly, in my opinion, the 21 EMA. Notice how before when we broke above it over here in this massive candle, we held above it one day technically closing, but Post that day of closing above it, we held 1 day above it. Great. And then we gapped down below it, turned it into a resistance, and we pretty much just went sideways. The thing I like about here is the fact that we held 3 days now after a closure above. I do have people that have been watching me for a while, kind of like a 2 to 3 day rule, where whenever we break above a certain level, I want to see at least 2 to ideally 3 days maintaining that level. I don't want to close back below that level and essentially do what we did here, which was just a false breakout. I don't like that. And so far, so good. Not naturally, this doesn't mean that we can't still fall back below it. It just, in my opinion, makes me a little more confident that we won't. But again, always open to the possibility. But that's just the main thing I'm looking at right now. And the fact that we're, again, holding above it and almost turning it into a support, we're bouncing almost off of it, especially today, is a good sign. I do like that. Now, another thing that's interesting to note for Tesla here is the fact that these 3 candles are almost the exact same size, almost in the exact same trading range, pretty much to almost a perfection, pretty much trading inside of each other. So we essentially have 2 inside day candles inside of this candle, and this candle essentially inside of this one. Essentially, we have 2 inside day candles roughly in a row. What does that mean? It means that, well, one is just indecision. The market doesn't really know where the hell Tesla wants to go. It doesn't know where to put Tesla. Tesla is just like, I don't know where I want to go. But more importantly, once it does finally pick a direction, it should be a decently aggressive move in that respective direction, whether it's up or down. But like I talked about many times, the first few levels to really start getting a potential hint, like a true hint as to where we're going next, like I said, on the 15-minute chart, is pretty much above, we'll just say 205 to 206. And pretty much below, we'll just say 198. Those are the levels that I'll be looking at to get a pretty darn good hint. Like this, if we break below one of these, below or above one of these levels, there's a good chance we're going into that direction. But with that being said, both of them still have almost like a final boss, if you will, of a resistance or support to break through to really, continue, if you will. For instance, if we break above 205, 206, great. But what does that mean though? Well, we still have essentially, well, not essentially, literally, this upper part of this bear wedge, right, that we're in, the red line and the yellow line here, the bear wedge, to break through, right? And again, it really depends on when it happens. Like, for instance, we still have, technically, the gap is unfilled. Like, I don't consider this a filled gap, right? Sitting at, what is this? What do we close at over here? We close at 207.83, it looks like. Unfilled, technically still unfilled, right? So that is a resistance, which is the earnings gap. And we still have the resistance of this potential, bear wedge that we're in. So keep that in mind, right? That is still going to be a resistance. And that's pretty much all going to be sitting at about 207, 208-ish, give or take, of course, right? Somewhere around that general level. So 205 just really brings us up a couple dollars even higher to potentially really the true resistance, in my opinion. So that is important to understand. But the flip is true, right? For instance, if we go back in the 15-minute chart and we break below this congestion period to the downside, 198, we'll say, to make it simple. It doesn't mean that it's all doom and gloom just yet, because, well, we still have the 21 EMA sitting at, well, I mean, at this rate, it'll pretty much be at 198, so that will start looking a little bit suspicious, I'm not gonna lie. However, we still have the bottom of the channel. Now, naturally, the longer this takes, then this bottom of the channel is gonna start lining up with 198 as well, if we just continue going sideways for the next, like, almost a week, honestly. But at least let's say, as of tomorrow, we still have the bottom of the channel sitting around 195. That can still also be a support area. So that's kind of what I mean by these levels, right? You want to wait for the price to determine what level. And like I said, even I think on this candle here, it's a scalper's market and or an option seller's market, where essentially, while Tesla is pretty much zigzagging, doing a whole lot of nothing, you can either scalp it, like I talked about, buy 198, sell 204, rinse and repeat, or short 204 and, essentially close your short position, if you will, at 198, roughly 200 to 198, or you just sell options. You go up to 204, sell calls, comes back to 198, buy back those calls, sell puts. Go back to 204, buy back those puts, sell call. Rinse and repeat until a direction is picked. And that's essentially what I am personally doing right now until a direction is picked. So that's the way I'm looking at it, right? We have, interestingly enough, though, the squeeze meter at the very bottom, the TTM squeeze, it is building up a lot of red circles once again. And so far, it's showing that it wants to potentially break out to the upside, looking a little bit bullish here. So that's a good sign. Again, it's not, it's not guaranteed. It's not absolutely guaranteed to go up to the top side or squeeze to the top side, but it is hinting to the upside. Good to know, right? And those are probably the main things I'm looking at. We have, of course, someone's knocking on my door. The stochastic momentum, right? Kind of, towards the top side, which is showing good momentum, but every time it's reached the top side, what do you know? It's pretty much went back at the very least to the median around the middle. Okay, so that's, a little concerning. So there's a lot of conflicting signs, right? We have the Williams percent meter also towards the top side. Okay, it's a little bit concerning, but it's not the worst thing in the world. It can stay overbought, if you will, for a while, as it did with being oversold down here for quite some time. And it was oversold well before we actually found the bottom. So again, take it with a grain of salt. So there's a lot of different signals, a lot of conflicting signals for Tesla here. And we are in a bit of an interesting situation, right? Where, for instance, the RSI, in my opinion, looks pretty healthy. The MACD, not too shabby. The Williams percent meter and the stochastic, good momentum, but a little bit overbought. So a lot of conflicting meters, right? We have, of course, like I said, TTM potentially squeezing to the upside showing here. So a lot of really good stuff here for Tesla and some bad stuff as well, which is why when, there's a lot of conflicting things like this, essentially, or indicators, I'm not in a rush. I don't get FOMO. Like when I saw Tesla this morning at 205, did I get FOMO? Absolutely not. I was convinced that it will most likely reject. And if it doesn't, and I see strength, I'll just buy it. I'll buy on the strength, right? That's the way I look at it, right? And that's the way I'm currently playing it. This is not really showing too much right now, unfortunately. And yeah, that's the way I'm looking at it. Just waiting for the levels to break, waiting for the price to dictate where we want to go. The good thing to note is the fact that as we're consolidating here after this break, so like I said, volume is important as well, right? So as we broke this price over here, similar to what we did over here, we broke up here with higher volume, we broke up here with higher volume. The volume spiked on both breaks, and then it slowly decreased as we just essentially did a whole lot of nothing. Same thing is doing right now. As we're doing a whole lot of nothing, we're slowly decreasing in volume, which is a potentially good sign, but not necessarily bullish. All that means to me is the fact that we are preparing for our next move to be potentially decently large. So again, just look at the overall price action, look at the levels, let the level breaks decide where we're going. No reason to guess, no reason to think you're smarter than the market, because you're not. Neither am I. That's just how it is, and that's just how it works. But again, like I said, if I absolutely had to pick a direction, I'm slightly leaning bullish here. But again, only slightly. Let's take a look at the monthly chart, because we did now officially close February. The February month is closed. And what we see here is, speaking of which, actually, I'll go back to it on the daily. What we see is a decent looking candle. Actually, this is not a bad looking candle. The MACD still looks a little bit questionable. The RSI looks a little bit questionable. I'm not a fan of the RSI and the MACD in the monthly chart, I'll be completely honest. And I'm not a fan of this lower volume on the monthly chart as well, considering, I guess it is February. It is 29th though. So February is kind of like a normal month, essentially this month. But we are 1, maybe 2 days lower than most other months. So that could be the reason for the lower volume. Obviously a caveat, make sure you understand that. But, some people might look at this and be like, wow, look at that. It's a beautiful looking hammer candle. I wouldn't call this a hammer candle. The hammer candle, first of all, a little bit of wick at the top, not too bad, but the wick at the bottom is way too small relative to the actual body of the candle. Not a fan of this hammer candle. So the monthly chart to me, it's okay. Honestly, it's just okay though. Like I'm not a fan, but I'm not hating it either. If I had no position, I had no emotional attachment to Tesla, and I looked at this monthly chart, very neutral. That I know some people might hate to hear that because they just want to know, like, is it going up or is it going down? I don't know. It's a very neutral monthly chart. It is what it is. That's just how I see it. However, some people might look at the daily chart here and look at this candle today and be like, hey, that looks like a hammer candle, right? Also, so-so. And the reason I say so-so is because, again, the wick at the top, a little bit long. I'm not a fan of the wick at the top being this long. Not a fan of the body relative to the wick below. It's okay. In my opinion, a better hammer candle, the wick is either longer or the body is either shorter, whichever one. And of course, as I'm sure most of you know, I don't like it when it's red. It's a red hammer candle. Red hammer candles are a lot less convincing than a beautiful looking hammer candle that's, well, not red. For instance, here's the beautiful looking hammer candle. This is what I call a hammer candle. This one right here. Now this, ladies and gentlemen, way back on November 1st of 2023, now that's a hammer candle. Beautiful long wick, beautiful buying pressure, beautiful tiny body relative to the wick, tiny wick at the top of it, very, very small. This right here, almost perfection. Truly, like this is arguably almost a perfect hammer candle. That's what I want to see. So again, take that hammer candle compared to this one. You can see not as sexy looking. That's the way I look at this hammer candle. In terms of option flow, today was kind of all over the place. Nothing too crazy. In the morning, we had a 2.5 million put sell for 300. Oh, sorry, call sell, my bad. Sorry, I meant to say call sell for 300. Someone clearly doesn't think Tesla's going above 300 by 2026 of January, and if they do, they're willing to sell it. There was a 1.2 million and 1.7 million put buy here, 210 put, 225 put, one for November 15th, one for, July, or is this August? This is August, sorry, August 16th. Other than that, kind of all over the place, just really not a whole lot of nothing, not really anything super convincing. Even these aren't super convincing because it's just, yeah, it's not convincing in my opinion. Nothing crazy in the options market today as well. Today felt like a bit of a slow day, in all honesty, a little bit of a chop fest once again, even with PCE. But sometimes it is what it is. My option selling strategy right now is very happy with it, though. I will say that. I'm very, very happy with that. But with all that being said, I don't want to ramble too much. Thanks for watching. If you enjoyed, don't forget to hit that like button. I'll see you tomorrow. Peace.